Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Wednesday, 19th day of May, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone. Follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. It also gives you access to the chat box so that you can ask questions and participate in the discussion. On the days when you're out of the office or away from your desktop, point any internet-connected browser to cfrn.net/live. There you'll find a live real-time simulcast of the show as it unfolds. You just won't have access to the chat box. We also stream live each day on our YouTube channel, which is youtube.com/CFRN. Not only do we broadcast live on our YouTube channel, we archive each and every daily show. Currently, there's over 1,700 daily shows archived there for your viewing and educational pleasure. So let's open with a word of prayer. Heavenly Father, we thank you for your blessings, your mercy, and your grace. We thank you for hearing our prayers, feeding us with your word, and encouraging us as we have gathered together. Take our lives and use us to love and serve you and all people. In the power of your Spirit, in the name of your Son, we are created by your power, redeemed by your love, and strengthened by your Spirit. We give ourselves into your service. May we love you and love others with all of our hearts. In Jesus' name we pray. Amen. Amen. Well, happy Wednesday. Hope it's a happy Wednesday wherever you are. Let me give you the numbers here from around the world. These are the cash markets, or the indices as they're called. Starting here in the U.S., the Dow is down 343 points. That's just over 1%. NASDAQ down 102 points. That's a drop of about 0.75%. S&P 500 down 37 points, almost 1%. And the Russell 2000 down 36 points, which is a drop of roughly 1.5%. In the commodity basket, crude oil down $2.45, trading 63.04 last. That's a drop of 3.75%. Gold up $17.60, trading 18.8560 last, gain of almost 1%. Silver down 28 cents, trading 28.04 last. That's a drop of just over 1%. In the Asian markets at the close, Nikkei dropped 362 points. That's a drop of 1.25%. Shanghai fell 18. The Hang Seng gained 399 points, and that's a gain of 1.5%. And in the European markets at the close, FTSE down 84 points. That's a little over 1%. The DAX down 273 points. That's 1.75%. The CAC down 91. That's a drop of 1.5%. And so that gives us a mixed day in Asia, thanks only to the Hang Seng. It is a red day in Asia, and it is a big red Radio Wednesday here in the US of A. With that, we'll pass it off to Michael if he's ready. And he'll do a recap of everything that happened this morning in the live training room.
Okay.
When he's finished, I'll come back. We'll take a look at the concierge trade alerts, the Logic 247 alerts, all that, and answers to your questions. So Michael, I see your charts, and it's all yours.
Excellent. Here we go. All right. Good afternoon, everyone. Today is Wednesday, the 19th day of May, 2021. If you've not taken a free trial with us and you want to take a free trial with us, go to the homepage here at cfrn.net. On this page, scroll down to where it says free 5-day trial, no credit card required, right here. Click on that. It's going to bring you to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you if you want to. Hit the send button and you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click that link, we don't know that you took the free trial. So you gotta make sure you click on that link. Okay? Okay. Recaps. Now today was a pretty wild day. Bitcoin's all over the world. I mean, it's all over the place today. So it was making everything else be kind of wild too, I think. And then crude inventories came out. I don't even know what they were, but crude was all over the place when the inventories came out. So I mean, if we go here and here, we'll see what crude inventories were. Today, crude inventories, they came in almost as expected, but crude jumped, or well, moved anyway, more than it normally does. But anyway, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 19th day of May, 2021. Today, we lost 5 ticks in crude and made 20 ticks in gold and 32 ticks on the ES, put us at plus 550 on the morning session. Today, it took 8 minutes and 1 trade to get to the goal for the day. At that mark, $100 a contract, and we took a total of 13 trades this morning. On the month now, we're at $7,487. That's over 13 trading days, averaging $575 a contract per day. So far this year, we've gotten the goal for the day on 94 out of 95 days, and that puts us at $70,520 per contract. That's over 95 trading days, averaging $742 per contract per 2-hour trading day. Okay. Okay. Yeah. Okay. I gotta sneeze. I was waiting for it, but it didn't happen. Okay. So let's go to gold. Okay, there it was. Okay, so gold was all over the place today. Most of the markets were. All right. Now, in the beginning, I upgraded last night or yesterday to version 4.0 of DT Pro. For all you guys who are DT Pro users out there, if you're on the 4.0 upgrade, I put a new release out last night. If you go to indicators and you go to the indicator store, in here it says CFRN indicator set CFRN version 4.0. Right there, CFRN version 4.0. That's the one you should get. Now, if you do this and you've already done these two you know, these two might be highlighted already. If you do this one and you've already done those two, then there's going to be a file that you need to get rid of. And it's going to be in here. Okay, in Documents, My Indicators and Strategies. This is the one you want to keep, CFRN Indicator Set, version 4.0. It's a CLIB file, CLIB file. There's going to be another one that's a CLIB file. You want to delete that one. Okay, keep this one and delete the other one. There's probably going to be two other ones, one for the slingshot and one for the indicator set. You want to delete them and keep this one. Okay. Okay. Now, so our first trade here in gold, it doesn't look like it was the first trade that came available. Now, there was a trade right here that I missed at 936, but this one right here that we picked up, our first one on gold, we got 10 ticks profit. That's where we got the gold for the day. It was right in there. You can see gold started moving up, and it had that trade. Then it had one more right here, right after it, that I didn't get. It had one right over here that I didn't get. One right in here that I didn't get. And let's see, what else didn't I get? A couple more right in here. One right here, and one right there. No, the markets are moving around really fast, and it wasn't just gold that was moving around really fast. The ES was moving around really fast with it, and then crude oil started to move really fast. But let's see, over here we had a shorting opportunity right here. Okay, and then another one there and there. And then it got pretty choppy here for a little while. All the markets got really choppy for a little while. Then it started moving down again. There was a shot here, there, and there. Now on this one, we went from 10 to plus 15, then from 15 to plus 22. Then we had a break even. Then we went to 28. And then, did we take one more? We did, we stopped out. And we went to 20, way over here. Now in here, I was just showing the leg lengths, and I was showing levels that it should get to, the price should get to. And you can see it was coming pretty close to those levels. But then toward the end of the session this morning, all the markets just kind of petered out like this right here. They just stopped moving. All right, so we ended with plus 28 on the gold. Okay, now in here, let me scroll back here. There we go, on crude. All right, our first trade on crude was right here. This trade took forever to develop it. You know, we went long right in here, and it went and consolidated in here for a bit, and then just ran right up to this level that I had drawn up here, the target level. Ran right up there, and we took 11 ticks profit on that first one. We missed that one. Then we stopped out on this. That put us at plus 3. Then we stopped out on this. This one was to the tick, and then went down to the target level that I had drawn down there. It pulled back up almost to the pullback level that I had, and then it went down to the target level that I had. And well, it stopped me out pretty much to the tick, and then went and gave profit. But so I lost 8 ticks there, and I lost another 8 here. That put me at minus 5 on the morning session. Now I missed a couple of trades in here, there, and there, and here. And then, as I said, this is when the inventories came out, and it had, you know, it made the markets really move, as you can see. Well, really jittery anyway for a couple of seconds. And then they started moving again. There were trades there, 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 and there. And this is where everything started to get sideways. And let's see, in the last half hour, it really didn't have a lot of good movement here. It did have movement, had upward movement, and so there were some trade setups. There was one there, there was one there, one there, and then it got kind of sideways. Okay, but we ended with minus 5 on crude. All right. Now the ES was really jumpy today too, but let's go back to the beginning. Okay, now I had to set my charts up all over again this morning because when I did the upgrade last night, it messed everything up. All my things that I had set, it changed. But anyway, so the ES started out here. There was a shorting opportunity right in here. this morning on the ES. Started out, then we had to break this dynamic support. Then we did break it, and there was another short right. Well, that cycle's going pretty steep, so maybe there wasn't one there. Cycle needed to reset. It did reset. Didn't give us any trade setups after the reset, and then it finally got long over here. Now, I went long here, and on my first trade on the ES, I picked up 16 ticks. And the next trade, I had a break even. Then I had a whole bunch of chop in here that we didn't get involved in. A couple of trades here. This was a trade that would have stopped you out. This one would have given you a little bit of profit or break even at best. I grabbed this for 8 ticks and then this for 8 more ticks. So that took me from 16 to 24, then to 32. And then it got really choppy and didn't give us anything in here. And it started to move in here. And I was looking at trade setups in here, but I don't think I did. Well, I did some more trades. I did a couple more trades. I had some break evens, but I didn't make any more money on the ES today. Now we had a new fella in the room this morning, so I was going into some detail for him. So we had a break even right here. Now a whole bunch of chop right in here to stay out of. A couple of trades in here that would have been profitable. Then on this leg down, there were a couple of trades in here that would have worked out. One there, one here. Then it split around, started to go up. There were a couple in there, one there, one there, and one there. And here's another break even as we get up to the weekly trading zone here. Now, this is another thing in 4.0. You know, when you go to the indicator store and you put 4.0 in here, if these are duplicated in here, that's because of that CLive file that I told you need to delete. But when you put the CFWTZ on, this auto zoom thing right here, you're gonna have to shut that off. Okay, shut that off. It's on by default. I can't change it. You got to shut it off. All right. All right, and that was pretty much it on the ES this morning. There were some opportunities during the break. Once it got out of all the chop here and we broke this dynamic resistance, it was a long right here off the BBC that worked out. Pretty choppy, but it worked out. And that was it. Okay, so with that, we'll go back here to the spreadsheet. Again, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 19th day of May, 2021. We lost 5 ticks in crude, made 20 ticks in gold, and made 32 ticks on the ES. Put us at plus 550 on the morning session. Today, it took 8 minutes and one trade to get to $100 a contract. We took a total of 13 trades. So on the month now, we're at $7,487 a contract. That's over 13 trading days, averaging $575 per contract per day, per 2-hour trading day. We've gone 94 to 95 days this year, getting our goal. And that puts us at $70,520. That's over 95 trading days, averaging $742 per contract per 2-hour trading day. Okay? Now, if you've not taken a free trial with us, go to the homepage here at cfrn.net, scroll down to where it says free 5-day trial, no credit card required. It's big and green. Click on that. It's going to bring you to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button. You'll be sent a confirmation link. You must click on that confirmation link, okay? If you don't click that confirmation link, we don't know that you took the free trial. So you got to click on that confirmation link, okay? Okay, that's it, guys. With that, we can pass it back out to Studio A in fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I am ready.
Good.
Okie doke. Recap of the recap.
Today it took 8 minutes and 1 trade to get to $100 contract.
Good job.
Thank you.
All right. We're going to move quickly today because we got some stuff coming up this afternoon. So I'm going to get in, get her done, and get out. We're going to start first with Logic 247. This is our 24/7 around the clock E-mini alert service. So far, we've issued over 7,000 alerts over the last 150 46 weeks. Now, the global markets open Sunday night at 6 p.m. Eastern, and they continue to trade around the clock until Friday afternoon at 5 p.m. Eastern. So alerts may come at 2 a.m., they may come at 2 p.m. It's whenever opportunity presents itself. And you never have to worry about missing an alert or missing a trigger, because once an alert triggers, there's a greater probability of it triggering again, and maybe even again, than not triggering again. So, this week, 23 total alerts. The first couple days we had some pretty sideways consolidated movement. We finally made a break to the downside today. So 23 total alerts issued, 2 never triggered, still waiting on 3, 18 actionable alerts. So far nothing stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure and a very simple 3-step process that we teach all of our traders. Now, the alerts look like this. And we are up to alert number 7,439. And that is over the last 146 weeks, I believe I just said. These are the ones that we're still waiting on. Okay. This was a short on silver, long on gold, short on crude oil. We're in the July contract now. Short on the NQ, short on the Russell, short on the Dow, short on the S&P. And then back to the 17th. That was everything issued on the 18th. Okay, this was a long on crude oil, and the way you read the alert, 7428, that's the alert number 7,428. The symbol, crude oil. B means buy, S means sell, T is the initial target. On a long, potential resistance would be your second target, and then the final trade to target would be the weekly trading zone above on a long or below on a short. This particular alert, at the time recap was done, the price swing was at 67.02. That's just a notation, a point of reference. And so this alert was worth $420 per contract traded. So you have everything you need. You have the entry, target, second target, final target. You set your stop loss using that 3-step methodology based on market structure that we teach you in the one-on-one mentoring sessions as a passport holder. This was a long on the S&P. Initial target, second target, third target, final trade to target. When you see the Z's, that means it never triggered. Here we got a long on the Dow, long on the Russell, got a long on silver, got a long on gold, a long on crude, long on the NQ, long on the Russell, long on the Dow, long on the S&P, and this was the first alert to come out Sunday night, shortly after the Globex Open. Time you see on my screen is Pacific. Now my charts, of course, are set to Eastern Time. So that's week 46 so far up through Wednesday at 12 noon. Last week, week 145, market was incredibly kind. We had a total of 67 alerts issued, 2 never triggered, 65 actionable. We had some good follow through. And so we ended up with only 5% stopped out last week based on that 3-step process, market structure. And a typical week over the last 146 weeks now is 20%. So again, the markets were incredibly kind last week. Our other alert service, the companion, in fact the original, alert service. It's called the Concierge Trade Alerts. And if you're familiar with the weekly trading zones, the CTAs, the Concierge Trade Alerts, you can think of those, if you want, as daily trading zones, because price does behave around the CTA numbers, the important price, important area, much the same way that it behaves around the weekly trading zone. So these alerts are posted as a static report at the beginning of each session, shortly after. Last night it was 6:25 Eastern when they were posted. And the way it works is, once this is posted, you put two lines in the sand, one at 41.56, one at 41.09. Once this is posted, if price starts trending up towards 41.56, that's bullish, and so logic will be looking for opportunities to buy the market, buy the dips on the way up. If price starts trending towards 41.09, that's bearish, so the logic strategy will look for opportunities to sell the market or sell the rallies. And so you just simply go through each one of these, and I'll show you when I get to the 30-minute chart what the line in the sand looks like. If you would like to grab a screenshot, you can. And a reminder, we archive every daily afternoon broadcast on our YouTube channel. So you can scroll back a week, scroll back a month, scroll back a year, scroll back 2 years, and the most important thing you'll find is that in all that time, nothing's really changed. We use the same language, the same indicators, the same strategy, and Michael teaches you the underlying strategy, the basic principles, how to always have a hard stop in the live training room. As you begin to understand the strategy, then in the one-on-one mentoring sessions, I will teach you how to apply that market structure so that using the same underlying method and strategy, you can participate in the larger time frame trades. All alerts are based off of the 30-minute chart, but the basic principle is exactly the same. The only difference between a trade in the live training room and a alert, be it a concierge or a logic alert, is we're not using a neat tick hard stop on the alerts. We're using market structure, and there is potentially more profit available. In the morning, Michael's teaching you how to get in, get your 2 points, get out. Get in, get your 2 points, get out. Or the equivalent of 2 points in other markets. 2 points in the S&P is $100. 2 points in the Russell is $100. As you learn the strategy and gain some expertise, well, then you'll also be able to trail your stop the way Michael does, and at some point you'll start trading the alerts if you choose, but you always start out in sim. Okay, now, you'll never learn how to trade just watching other people trade. So as soon as you become a passport holder, you should get that demo account, that simulator account up and running. Do your best to trade along with Michael, to follow him. It's not so important that you learn to match him step for step, tick for tick, but what's really important is that you understand why he's doing what he's doing. He explains every move he makes, every move he takes, step by step. And of course, it's an interactive environment so that you can ask questions while the session's going on, just like with the alerts. Once an alert is published, whether it's 2 a.m. or 2 p.m., you can ask questions in the discussion group so that you've got support literally around the clock. You, of course, have to determine what kind of a trader do you want to be. And there's no right or wrong answer. The right answer is whatever fits your personality. Do you want to get in, get out with your 2 points a day and just build the number of contracts you trade over time? Because 2 points with one contract is $100, but with 2 contracts it's $200. With 3 contracts it's $300. And our 24/20 blueprint walks you through the process. Once you put together 10 consecutive days in a row in the simulator where you reach your goal in 10 trades or less, the blueprint will then give you the green light to go live with 1 contract. Now that you're trading live, your goal is to increase your account balance by $2,000. Once you accomplish that, the blueprint will give you the green light to add a second contract. The big difference between the first and second contract is you're adding the second contract with profit you earned in the market. Obviously, your first contract, that comes out of your pocket, your initial startup capital. But going forward, you'll add contracts when the blueprint gives you the green light, but you only add one at a time, and you only add with profit you earned in the market. Now, the same 2 points that make you $100 when you first go live, by the time you've worked your way up to 5 contracts, the same 2 points is $500. Once you work your way up to 10 contracts, the same 2 points is $1,000. So you get to choose, as you're writing your business plan and your trading plan, do you want to be the trader that goes for more points every day, or who builds their account in such a way that you're able to trade more contracts for less points? Again, there's no right or wrong answer. One seems simpler than the other, but it's the one that best fits with your personality. So with that said, let's go take a look at what has happened today in the markets. We always start out with the daily chart. I'm going to refresh it. You leave your charts running overnight. Sometimes they can kink up a little bit, mostly on the daily. So I always like to refresh it, just like this. Okay. Now, that battered price channel that we popped out of on the top side and the bottom side, I have left it in place basically for the bottom trend line, because what have we done? We've come back up and we've hit the bottom trend line once, twice. We came just shy of it today. Now we are indicator light, which means we don't have a lot of conflicting indicators on the chart. You know, 3 telling you to go long and 3 telling you to go short. We have a couple of indicators, and they work in concert with each other. The green line is called the BBC, stands for bull bear cross. When price crosses above it, we're bullish and anticipate higher prices. When price crosses below it, we're bearish, we anticipate lower prices. Above bullish, below bearish. Now, the pullback to the BBC holds more often than it doesn't. Whether you're on the range chart, the 30-minute chart, the daily chart, the weekly chart, price always reverts to the mean, and in our case the mean happens to be green. Price flows on a 1-minute chart the same way it flows on a monthly chart, from support to resistance, back to support, back to resistance, back to support, over and over, again and again. Never-ending cycle. It doesn't matter what market, it doesn't matter what time frame. That's how price flows. So we are sitting right on top of the 38% Fibonacci price extension. Back on the 13th, we reached down and touched the 50% Fibonacci price retracement. I might have said extension, I meant retracement. We are measuring just the last leg up. Now, once we break and run and take out this new all-time historic intraday high and closing high, we will develop a new last leg up. But for now, the last leg up remains this leg that began March 25th and ran to May 10th. And you'll notice the pullback, it holds and it holds till it doesn't hold, and we fully anticipate that there will be times when it doesn't hold. That's what creates a tradable market. If the pullback always held, we would end up with a sort of a flatline, range-bound market. When price put in that new all-time historic closing high, the following day we put in a new intraday high. However, we had a red day. We had an outside day. We had what is called a bearish engulfing candle. And a bearish engulfing candle, especially on a daily chart, is one of the most bearish candlestick patterns that I know of. And so that move sent us down to the 50% fib retracement, which bounced us back up to the BBC, to red and falling, to the step line. So we've got three things here coming together that represent potentially good support. Now we got our resistance. We got above them, but we've now traded back below them. Okay, so over here, from this low to this high, here's the 24% fib retracement. Here's the 38% fib retracement, which is what we're sitting on top of. Right now, we've spiked it, and we have a low and a higher low for the moment. Okay, if we take out this low, then our next support looking left will be the low of May 13th, and that price is 40.29 1/4. If price takes out that low, then we're looking at the 24% fib extension and the 62% fib retracement. Now the entire move up, remember we were just talking about the last leg up, but the entire move, which began November 2nd and took us to this all-time historic high, the 24% fib retracement is sitting right here at 39.98. Might as well call it 4,000. Now, that's an important area. If we get back to the 50, we expect a bounce. If we take out this low and get to the 62, which lines up, it's the 62% retracement of the last leg, 24% retracement of the entire move that began November 2nd. If that 62 and 24, after they give us a bounce, which is the most high probability thing, because institutions, fund managers, they tend to watch daily charts the way we watch smaller time frames, like 30-minute charts and hourly charts, 5-minute charts. So on a daily chart, when we hit a major fib like this, see this bounce off the 50% fib, even though we spiked it a little bit, took us all the way back up to 41.78. Now here we come down. We spiked the 38, but we're resting just above it. Purpose of starting out your trading session, whenever that is, using the daily chart, you're able to identify where major resistance is. In this case, it would be above the high of May 17th. So roughly 41.87. Okay, that would put us back into this ascending, what was an ascending price channel. And if price continues to drop after today's low, we know that this low is important. Now, if you're looking at the smaller time frame, you have no way of knowing that this is the 62% retracement of the last leg up, which is very important. So by going to your daily chart, identifying the important prices, important areas, you're able to better trade the information you have to work with on your smaller time frame. Probably most of you have been in a trade where all systems will go and you clicked buy or you clicked sell and the market took off, and all of a sudden ground to a halt for no apparent structural reason. But if you flip to your daily chart, for instance, see, like here, when we came down through the 38 this morning, and on this day when we came down through the 50, just looking at the 30-minute chart would not give you the information you need to properly trade this, because you would not know the importance of this area. You would not know that you should expect an incredible bounce, which lasted for 2 trading sessions. So start here, make note of the important prices, important areas, because based on how you scale your chart, when you go to the 30-minute, you may only see like 2 days or 3 days of price action. I mean, we'd have to go all the way back to the 10th to see the all-time historic high. We'd have to scroll all the way back to the 13th to see this most recent swing low. Now, price from here, it's always on a mission. Price is always trying to go somewhere, do something. And so from here, price will do one of 2 things. It will attempt to take out this low, or it will attempt to take out this little triple top. If it can do that, then it will continue on and attempt to take out this swing high. Okay? All right. So hopefully you made note of the numbers as we discussed them. Now let's jump over to the S&P 30-minute chart. Okay. Need to scrunch it up so it all fits in. Last night, all of our traders had an alert. Now, today's, let me find last night's open. Okay, the open was that candle right there, that little doji. So let me put in a vertical line like that. Okay, so this separates yesterday's session from today's session. And so as you can see, we really at a glance can only see 2 days of activity, okay, on the 30-minute chart. That's why looking at that larger time frame is important. Now, as I said earlier, important prices, important areas are almost always tested. So the alert was sent out to be short 74.29, and let me show you what that looks like. $74.29. Okay. Now, the idea is to be short 41.19 with an initial target. Yeah, 74.29. To be short 41.19. With an initial target at 41.17. The initial target's always $100 per contract, with the exception of the NQ, because it's so volatile. The initial target on the NQ alerts is $200. So initial target, second target, third target, final trade to target, which is 4082/4083. And so 4082/4083, here's the weekly trading zone. Okay. Now, this first trigger, okay, 74.29, took us down to a low, 41.12. So from 41.19 sell 41.19 The initial target was 17, and then the second target was 41.07. The swing low was 41.11. So from 41.19, 41.17, next target's 41.07. Now this is what typically happens, is when you're trading the 30-minute chart, the larger time frame, price, once triggered, because this is an important price, important area, there is a greater probability of this alert triggering multiple times. Once it triggers, 80% of the time, it's going to trigger at least one more time. And some days we see 2, 3, 4, 5 triggers. Okay, so from 41.19 down to 41, call it 41.12. That's 7 points at $50 a point. That's $350 per contract traded. Price gets back above the trigger, drops again. Now, this was a logic alert. At 41.19, we have a CTA at 41.05. Again, your CTA, you can think of those as like a daily trading zone. We know how price behaves around weekly trading zones. Behavior around the CTA is very similar to a weekly trading zone. Only one of 3 things happens at a weekly trading zone: consolidation, rejection, or what we call the slice. That's when price slices through a zone like it's not even there. When that happens, price tends to retrace back to the zone it sliced through, and then continue in the direction of the slice. So the second trigger took us from 41.19 to 41.05. The second target's 41.07. So we met the second target here, we met the third target, no, we exceeded the first target here, we met the third target here, 1, 2, 3. Low is 41.04. Actually, the third target's 41.03. And then price gets back above the trigger, triggers again, and takes us to the trade to target, which is 40.82. So on every alert, both the logic and the CTA, the final trade to target is always that weekly trading zone below on a short. So you got 1, 2, 3 opportunities to get your goal for the day. Now, the CTA was 41.09, and the swing low here was 41.0475, so we'll call it 41.05. So that was 4 points. As I said, these 2 alerts, the logic and the concierge, they work together hand in hand. Okay. Often, remember, when price starts trending after the CTA numbers are published, once price starts trending towards the CTA number, then the logic strategy is going to look for opportunities to sell the market. Sell the market. Sell the market. Okay. So 3 triggers off of the logic alert, and then 1, 2, 3 triggers off the CTA. from 41.09, dropped to 41.05, 4 points, $50 a point, $250, $200 per contract traded. And then on this one, on this trigger, we dropped to 41.03 and a quarter, so we'll call that 41.04. So that's 5 points at $50 a point, $250 per contract traded. And then we got back above the trigger, dropped again, and this time we dropped to 4100 and a half. So that's 8.5 points. And then we get back above the trigger. See, there's 1, 2, 3, 4. When you get additional triggers, okay, they will often require less risk and more profit potential. So this is a textbook example of this. And this is exactly what I teach you in the one-on-one mentoring sessions when you become a passport holder. So there's the 1, the 2, the 3, the 4, which took us to the final. Now we spiked the final trade to target. So from 41.19 down to 40.82. Oh, that's going to be 37 S&P points from the published entry to the published target. The alerts come out prior to the trigger. Every alert I build in time for all traders to get to their computer, put on their thinking cap, put on the trading cap, and study the alert and study the chart. Because our goal is not just to give you alerts that you can trade for fun and profit, but to teach you how to find these windows of opportunity yourself. In the discussion group last night, I had a great question. After this triggered and got back above the trigger, one of our traders in the discussion group said, hey, would this be a 3-point window of opportunity here? And I said it absolutely would be. And it took us right down to the CTA. Support took us back to resistance, previous swing high, and then that began this big drop to the downside. So from 41.09 to 40.82, that would be 18 and 9, that would be 27 S&P points at $50 a point. Alexa, 27 times 50.
27 times 50 is 1,350.
Okay, so a $1,300 per contract move from the published entry to the published target. Trading's not easy, but it can be simple. Too many indicators, too many oscillators, too many algorithms creates too much noise. On our charts, you don't see them, the typical things, the MACDs, the RSIs, the advanced decline, the trend, the tricks. Not that we have anything against those. I'm sure that they all do exactly what they were created to do. We simply don't use them because our goal is to not make trading easy, because there is no easy in trading, but to make it simple. So we have some very basic guiding principles that you follow along. Again, you don't start trading live on day one. You come to class every day. Michael teaches you the strategy. As you start to get the hang of the strategy, then you're booking one-on-one mentoring sessions with me, and I'm going over the larger time frame trades with you. Okay. Remember, as you're writing your business plan and your trading plan, you have to determine what kind of trader you want to be. You want to be the guy that comes in, gets his 2 points, and goes every day and increases the number of contracts over time? Or do you want to be the guy that wants to go after the big move? Obviously, it goes without saying, taking 2 points out of the market is simpler than taking, 20 points or 29 points or whatever the number was. But it's what fits your personality, what you're most comfortable with. Okay? So that's where we stand on the S&P. On the Dow, we got a little bit of the same. Okay, and all these weekly zones are current. I thought 33. Let me fix them. 34,215, that's this week. 34,015, that's this week. 33,730. Is this week. And then the lowest weekly zone for this week. Now, price sort of held here, so this is a previous weekly zone, but I'm going to go ahead and make it yellow because it's still holding sway over the market. It's still important. The lowest zone this week is at 33,200. Now, if price flows from support to resistance, back to support, back to resistance, back to support, over and over, again and again, in a never-ending cycle, 33,200, and it does, then you should look at these weekly trading zones as fixed support and resistance. We've published them since December 14th of 2009. Once we publish them on Monday morning at 6:15 a.m. Eastern for all of our members, those become your fixed support and resistance for the entire week. Now that price has pulled up to the weekly trading zone and the BBC, that becomes potential resistance times 2. If price just pulled up to the BBC, we would expect that to be good resistance. The fact that it pulled up to the BBC and the weekly zone, that's good resistance times 2. And so on the next candle, which we're going to get in about a minute, if it starts printing red, we're then going to have a window of opportunity. We've got to get below the step line. So if we start printing red, if we take out this low, then our window of opportunity is going to be here, because we want to be aware of blue and climbing. That's bullish. So if price comes down to meet blue and climbing, that blue and climbing may very well become good support. So 33,660 to 33,620. That's 40-point window of opportunity. $5 a point, $200 per contract traded. Now, is it possible that if it unfolds this way, that price could just tear right through blue and climbing and keep going? Absolutely. Keep in mind, we not only have blue and climbing, but we have a zone from last week that it was spiked this morning, but it's still playing a critical role, so we're going to leave that on the chart. The CTA last night for the Dow, see how we had that consolidation across here, just like we do on weekly trading zones. Here's an example of a slice, which is the least likely thing to happen at a weekly zone. We sliced through it like it wasn't even there, and then we retraced back up to the zone, and then we continued in the direction of the slice. We then rallied up to red and falling, which we expect to be good resistance until proven otherwise. And down we go again. Okay. Now, just like a weekly zone, the CTA will do one of two things. It'll act like an iron curtain and send price in the opposite direction, or it will open the gate and allow for this type of movement. The trade to target is always the weekly trading zone below on a short. Okay, and so from 869 down to 730, it's about 130 points at $5 a point. These initial little triggers here, this one dropped from 860 to 850, okay, and the second trigger dropped to 840, so that's about a 29-point move at $5 a point. And then back above the trigger, here we go again. This time we dropped to 820. So from 869 to 820, that's 49 points, $5 a point. So we got 1, 2, 3, 4, 5 triggers. This one attempted to get back above the trigger, but it didn't quite make it. But we had red and falling all the way down to the trade to target, and then we continued on well past the trade to target. The long side, of course, was never touched. Now, we had a logic alert on the Dow to be short at 33,955. $33,955. Yeah. So from 33,955, we dropped right down to the CTA, where price got rejected. Consolidation, rejection of the slice. Sent this right back above the trigger. Caught that same drop again. And from 955 to 870, it's about 80 points, $5 a point. So again, this is an example of logic and of course the CTA working hand in hand. The CTAs are based on historic price action. The logic is based on current price action. Buyers are still in buy mode. They're pushing price higher. So we're getting above the BBC. Now, we only sell below the BBC, and we only want to be long above the BBC. So if this candle or the next can convince us that price wants to return back up to the trigger, as long as we're above the BBC, we can trade a window of opportunity to the upside. Something like 765 up to 840. That's 60, 70 points potential. But we don't have anything yet because right now price is just consolidating. We got two candles sitting right at the weekly trading zone. So we need to let the market make up its mind. Is it going to make a run to the upside, or is this just a little head fake? So we're in no hurry to dive into a trade. We're going to be patient, wait, be watchful, and then as the opportunity presents itself, that's when we want to take action. And to be even more conservative, we can wait to get above these highs right here. Maybe something like 810 up to 850. That's a 40-point window of opportunity. Might want to write those numbers down. This price is looking bullish here, but we really want to see the market prove itself. Okay, we don't want to get long down here and just see it roll over. Okay, if price can take out this swing high at 33,800, then an entry somewhere between 33,810 and 20 up to this potential resistance at 33,850. Okay. Again, it's important to note price is above the BBC, so we can go long, but all the way down we're only looking for opportunities to sell the market. On the Russell, price, just like we were looking at on the Dow, has pulled up to the weekly zone and the BBC. We would expect either one of those individually to be good resistance, but we don't just park an order and short it because that's where we anticipate resistance. We want to see price prove that it's found resistance. It may tiptoe up above the trigger. Now, if it does, then we won't be able to short that trigger if the BBC is below the trigger, because we can only short once price gets back below the BBC. So from 21.87 last night, we traded down to 21.84. It's 3 points, $50 a point, $150 per contract traded. We did it once, we did it twice, and then we made it to the trade to target, which was 6 points at $50 a point, $300 per contract traded. Of course, we continued further. The next zone down this week for the Russell is 21.42. Okay. Next on the list is the NQ. Okay, now the NQ has gotten above the trigger. So, can we short the next trigger? Unfortunately, no. Over here, it's worked out beautifully because we were below the BBC. But now that we're above, if we short this, we have to anticipate the step line, blue and climbing, and the BBC are going to be good support. We've also got a bullish cross here. And that bullish cross on the way back down can become good support. So we'll just have to watch and see if price continues higher, then a window of opportunity up above, trading up to this zone, and the long CTA will be up in this area right here. We need to get above all these swing highs and take our leave, or be prepared to take our leave as price approaches the zone. Now on the short side, 13,172, the weekly zone below that for this week is 13,150. And so from 13,172, this first drop took us down from 172. It took us down 56. So 20 points, $20 a point, $400 per contract traded. Back above the trigger, important prices, important areas, almost always tested. And takes us back to 150. So that's 22 points at $20 a point, $400 per contract traded. Back above the BBC, back above the CTA. If we continue to climb, take out these highs, window of opportunity takes us up to the zone overhead. If we get through that zone, then we've got a CTA on the long side. Crude oil, everything's pulling back to the BBC right now. That is a huge move to the downside today. Now the CTA last night for crude oil was to be short 65 bucks. And last night's open was that candle right there. And so let's move that to there. That was the opening candle. Okay. So we come down through the trigger at 65. We make it to the target at 64.80. So that's $200 per contract traded. As we attempted to get back above the trigger, we ran into the BVC, which is potential resistance. That pushed us back down, and we continue to drop through this zone, through these old weekly zones, and 62.65 is a current weekly zone. We even spiked that. Got one more zone below for this week, and that is 60.40 / 60.45. $60.40 / 60.45. So from the CTA trigger, and of course there were crude triggers along the way with each of there were logic alerts along for crude. The short on the crude was 64.95. Moving to gold. Okay. On gold, we got two-sided action. Triggered on the long side, 1872 was the CTA. We made it up to 1874.4. That's $240 per contract traded. Over here, we dropped below the CTA at 66. That took us down to 64.80. That's $120 per contract traded. And then we dropped from 66 down to the trade to target at 62. It's $400 per contract traded. And then we continued on to the next zone below at 1852. And on the long side, from 72, we ran to 73.60. And then we got below the trigger and ran to 74.40. And then we ran to 74. Okay. Another trigger here. Another trigger here. And this high took us up to 77.5. So that's 5.5 points. Price gets back below the trigger. Swing high 1891. So from 72 to 92 would be 20 points. At $100 a point, that'd be a $2,000 per contract move. And the exit signal printed at 1882.9. Silver. CT on the silver. We triggered at 28.23. And we dropped to 28.05. So the 2 penny move is $100. We get back above the CTA. We do it again. This time we drop to 27.42. We get back above the trigger. And we drop again. However, this is one of those situations where BBC is now below the short CTA. And we really don't like the short. We don't, it's one of the cardinal rules. We don't short above the BBC. Now, if you wanted to short this to the BBC, that would be a counter trend trade. All 7,000 alerts in the channel are all trend trades as defined by our indicators on a 30-minute chart. There's nothing inherently wrong with a counter trend trade. Some people specialize in counter trend trades. But everything we publish as an alert is a trend trade based on the 30-minute chart and the BBC. So this trigger from 28.23 took us, if we had gone to 27.23, that'd be a $5,000 per contract move, but we did not. We hit a low at 27.42. So just a little bit shy. 2 penny moves, $100. Okay. And again, fast recap. Now, these were all complements to the CTAs. Okay, we're still waiting on a couple. And for the week, the recap. 23 alerts issued total, 2 never triggered, waiting on 3, 18 actionable so far. No stop outs based on that $300 risk profile and market structure. Got to teach all of our members in the one-on-one mentoring sessions. When you become a passport holder, you have unlimited access to one-on-one mentoring. Michael teaches you the strategy 2 hours a day, every trading day. Michael and Valerie, 9:30 a.m. to 11:30 a.m. Eastern. It's interactive, which means you're trading in sim as you're learning the strategy, and every time a question pops into your head, you get to ask and get an answer, and that's important. That's the best model for learning. You know, you can watch videos of people swimming, you know, for years, but you're never going to really learn how to swim till you get in the pool. Same with trading. You can watch traders trade, whether it's video or even in real time. But until you roll up your sleeves and go to work, you're not going to get the hang of it. So as soon as you become a passport holder, get that simulator out, start putting on trades. Nobody's looking over your shoulder. Nobody's judging you. We simply want to see you go to work, and we can tell by the quality of your questions if you're doing everything the blueprint tells you to do. Business plan, trading plan, trading in sim, all of those things. It's evident in the quality of the questions that you ask. Okay, time now for our good word for the day. Yesterday we talked about not belittling our gift. Today we'll talk about God visiting again. Job 10:12 says, "Your visitation has preserved my spirit." There's no cure for past pain like present desire. When the longing for something is powerful enough, can wipe out the pain of the past, enabling you to rise again with renewed energy and purpose. If you ask women who have experienced the pain of childbirth whether it was worth everything they went through, many would be willing to go through it again to experience the joy of holding that little one in their arms. Maybe you've experienced a tragedy that has left you feeling indifferent about the future, or a heartbreak that still has you reeling in pain. You may have tried to rationalize it by telling yourself, as long as I don't care, it won't hurt. The fear of being hurt again is very real. A burned child dreads the fire, but you can't live the rest of your life in fear. Job lost his health, he lost his wealth, and he lost his children, all in a single day. How did he get through it? In Job 42:10, he said, "Your visitation has preserved my spirit." God is not finished with you. He will visit you again. Job's story ends with these words. The Lord gave Job twice as much as he had before. That's Job 42:10. And God can do the same for you. Be encouraged. He has a better future for you. If you devote your heart to Him, stretch out your hands to Him, if you put away the sin that is in your hand and allow no evil to dwell in your tent, then, free of fault, you will lift up your faith, you will stand firm and without fear. You will surely forget your trouble, recalling it only as waters gone by. Job 11:13-16. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell. And you're welcome, Fred.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.